What's happened in the last couple of months since our last market update? Well, the Bank of Canada held interest rates steady, so that creates some stability in the marketplace. We know where interest rates are sitting. They're about 4 to 4.25%, both on the variable and the fixed rate side. They're very close in terms of where they're at today. Fixed rates did have a small increase recently because there has been a bit of activity in the bond market, which we'll have a look at, pushing those fixed rates up. However, the bond market has subsided and now it's trading below 3% again. So that's great news for fixed term rates. And of course, while they're not in the threes, although we have seen some sub 4% interest rates, it is a good interest rate in perspective when a year or two ago we had rates at the 6% level. So this is fantastic for anybody coming into the market with the trade tensions and still some of that underlying inflation and unknowns from the tariffs and how that can impact inflation. The Bank of Canada is holding rates here. I suspect they're going to hang on to that opportunity to decrease rates if they need to, if they find that our overall economy is underperforming, but are not prepared to decrease rates at this time so that they don't use all their ammunition before they really need to. And so here you can see the 5-year bond rate just sitting below 3%, but it was over 3% just not too long ago in July. Unemployment has ticked up overall a little bit in BC. Since then, we're now sitting at 6.1 and CPI is staying flat. And however, it has ticked up from 1.7 to 1.9. So again, this is one of those things that the Bank of Canada is looking for. They want to see CPI staying stable and not increasing but decreasing. And overall GDP, it also 2 months in a row decreased by 0.1%. That last reported in May. Clearly our economy is not performing extremely well. It's in terms of GDP, it's decreasing, but things haven't gotten out of hand with employment being skyrocketing to levels that are, concerning for the Bank of Canada to make drastic moves just yet. It is unfortunate, though, because we know that these economic market conditions and government policy are impacting the construction sector. And as projects continue to complete, no new projects are coming into the pipeline or developers are starting to shelve projects. And those construction workers and all of their staff will start to be laid off, and we will start to see more pressure on our economic performance and unemployment, which will be considerations for the Bank of Canada. Now, here is a graph that just shows you how much product is currently under construction versus the completions that are coming up, and then the new home starts, which are basically decreasing. And there's not a lot of new starts coming on the market. So with Prime Minister Mark Carney's goal of, having 500,000 new homes a year is completely unlikely. And that is why, while we are in a short to midterm oversupply of real estate, we are structurally undersupplied for housing in this country. So we're going through this period of time where there's lots under construction, but when the music stops is when the real pain could really show up for the development industry, and of course really have an impact on our resale market, where we have a lot of inventory right now, but will be absorbed with natural growth in the country and in the city through natural birth and in-migration interprovincially and through various programs. Now, just to show you how bad it's getting for the developers, we've had another foreclosure announced. So Curve, this is the building beside the Butterfly down off of Nelson and Thurlow. This one has gone into receivership. And unfortunately, it was going to be the tallest passive house building in the world. And this project just couldn't make it. It was a super high technology, supposed to be luxury building with a major social housing component. They relaunched this project twice. The second time, they actually made a deal with the city of Vancouver where they made a cash payment to the city in order to put the social housing offsite in a different location to try to attract the buyers to help with their sales, but they just weren't cutting it. And so here they are. That project has now gone into receivership. And here's a couple of other projects that have also gone into receivership or been purchased out of foreclosure. In one case, one was a luxury condo project, and the other is now going to be a rental project. The government, however, is seeing how hard it is on the real estate industry right now. So two things have also developed. There is an extension of from 12 months to 24 months before the new DCCs or development cost charges, the new increased prices that developers have to pay. They're being pushed out further to give them some time before they start seeing increased costs. So when people think about unaffordability, all these costs add to new housing costs. So they're being pushed out. And there's also a policy that's coming into place where 75% of the developers' fees are going to be able to be deferred until occupancy out 4 years so that developers don't have to come up with that cash now and have a chance to actually get the project launched and moving forward so we actually have more housing starts. Another policy change that occurred as well is BC allowed developers more than 18 months to secure their sales, well, up to 18 months for smaller projects and more than 18 months to secure their sales to get their financing to get projects off the ground, because new projects require 60 to 75% sales, pre-sales, in order to get bank financing so that the project can go into construction. That hasn't been happening, so the government has also extended that timeline so that these projects don't get canceled. And as you can see, there's just so much downward pressure on the new product building side of the market. Developers are calling on the federal government to reconsider the foreign buyer ban and the foreign buyers tax. The foreign buyer ban was only supposed to be a 2-year ban, started in 2023 and set to expire January 1st of 2025. But it was extended another 2 years. And now the local developer market is calling on the government to consider a tweak on this ban and allowing foreigners to buy pre-sale projects, but not resale projects. So to preserve the resale housing for locals at local pricing, but allow foreigners who are interested in participating in pre-sale projects to participate in those type of investment opportunities, because most of the time it's investors that are purchasing pre-sale as opposed to end users, because most end users want housing now and they don't have the patience to wait the 2, 3, 4, 5 years for the projects to complete. So this is a call from the local developers to try to get the capital in order to sell these projects in order for them to be built in the future, because if they don't, we'll again have that structural low supply of housing in the future. One suggested refinement of this policy is also forcing any foreigners to rent out any new homes that are purchased to prevent any kind of flipping or speculative behavior and create more housing in Vancouver. Of course, the new housing that is being created is by far not new condos. It's mainly rental housing. So we are going to see a lot more housing, which is currently being built right now, but it is rental housing and a lot less condo or stratified home ownership housing available for folks in our market. And that's just the sign of the economics. A lot of the new stuff doesn't pencil, and the rest of the policies and the expense just is at the point where people cannot afford it and don't want to buy it. In other news, part of why we are where we are has to do with government policy from a federal and provincial as well as municipal level. And recently, something that really hasn't been talked about too much is there's been a shuffle in the BC cabinet. And so Ravi Kahlon has actually been moved from housing minister into jobs minister, and now Christine Boyle is becoming the new housing minister. And so hopefully the industry is looking for her to be a little bit more collaborative and working with the private sector in order to help create more housing and resolve some of the issues and the crisis that we're experiencing in the real estate market here. In completely other news, what's happening in the Vancouver real estate market? The City Council has approved a 20-year plan to revitalize Granville Street, which was once buzzing with entertainment. I remember going to Capital 6 when I was a kid to go watch the movies, and you had the local theaters that were thriving. And now that street face has really changed. It doesn't feel safe. It doesn't feel clean. And they're looking to transform that strip back into a pedestrian-friendly entertainment zone. And with that is actually starting to show some shifts in the policies or the thinking of City Council, because recently they've actually also, as part of this, are looking at relocating some of the SROs that previous municipal government had purchased and created in that particular location. And now they're looking at moving that supportive housing out of there to more what they would say better suited locations, and also to allow these areas to thrive. It could be a welcome change by those that lived in the downtown core with the changes that had been felt on the street ever since COVID and the resulting impacts. Another exciting development is now the city is considering subdividing laneway homes. This would be really interesting because, of course, we have the new zoning, which allows for multiplex to be in some cities stratified, some cities it's not. But here you could take existing laneways, which currently are not individual homes. They're part of the main house. So maybe the parents live here and their kids live in the laneway, and eventually the parents move to the laneway and the kids move into the house, but they're not two separate properties. They're one title. And what this is exploring is subdividing off that laneway and turning it into its own house, like a coach house, if you've ever come across that product in kits, or infill product in some spots in East Van, where you can actually buy that property separately, again, to increase that missing middle housing, which I think would be really interesting because it'll instantly create more inventory and more housing very quickly just with a policy change. Lastly, I'm going to leave you with just a recent ruling, which is just something to keep lookout for. What does it really mean? I think time will only tell. But there was a recent ruling in the courts that basically ruled that some Crown-owned lands had a defective and invalid title and essentially handed over the title to the First Nations. Those particular First Nations that were in the courts seeking rights over that land. This happens to be some productive land in the city of Richmond along the Fraser River in an industrial area where I believe warehouses that are even leased by Amazon exist. So this obviously sets a very interesting precedent if this ruling continues on, because it could set the template for other claims for other titles that could be challenged. There's not a lot of treaties in the province of BC. This could set the precedents for other groups to seek claims of private land. So what we're going to watch for next, I would assume, firstly, there's going to be an appeal. I think there was 2 other First Nations that were also seeking rights over that land. But of course, potentially will be some appeal from the private property owners that own that land, mainly the federal government, the city of Richmond, and the Fraser Port Authority. So keep your eyes out on this with respect to what's happening to property rights in the province of British Columbia.